Today's number is 9 because what we've just seen in markets has only occurred that many times in the last 30 years. What is it and why do we need to be paying attention? In today's video, we'll take a look at both the investor and trading perspectives on the markets right now as gold approaches our first major take profit target. And of course, we see AMD and OpenAI do a deal, sending the stock going absolutely bonkers to all-time highs during the last session. What could this mean for Nvidia and others moving forward? And will we continue to grind higher through the month of October, often considered the most volatile? One thing's for sure, guys, there's a lot of opportunity out there, and there are still a whole bunch of great setups coming. Stocks, commodities, and cryptos, let's take a look at which ones we should be watching right now together. See you soon. This one is not to be missed. Well, welcome back everybody to The Daily Show. My name is Thomas Atkinson, and in today's video, we'll be breaking down the macro, the data, and of course, the key flows. We've also seen a couple of large dark pool and big transactions coming through in some of the hottest sectors, so stay tuned for that. But we'll kick things off straight away by taking a look at the big picture stories right now. How strong is this market? Should it continue for a while? And what do we need to be worried about if we are very strong bulls right now, thinking that the bears could come back maybe even as soon as this month? Well, first up, let's take a look at the facts. And the first one is, of course, the market has been up 6 months in a row. And you might think, well, that's not a big deal. Well, actually, it really is. If you go through history, you'll notice there are only a few periods in time where markets have been this bullish. And 1 year later, yep, you can guess it, it is literally always meant that the market would be up over that period of time. It also strengthens the case for the next couple of months, in particular 3 months, and it makes us start to wonder more about structure than anything else. So let's kind of get into that storyline of what's happening. First up, the NASDAQ has been absolutely incredible. Of course, the Russell 2000 is starting to play the game as well, which we'll get into in a moment. Small caps coming through. But post the rate cut, post the Federal Reserve's decision to say, look, we've got a dual mandate. Now we don't care about inflation. We're just going to deal with the unemployment numbers. We have not seen any real drop in the NASDAQ. In fact, it's been 115 days now without a 2% drop. I think in the last video, we talked about a 3% drop. Well, it's actually been even tighter than that. And you can see here that this is actually the 9th longest streak since 1985. And that's a long time. And it actually is starting to get up there with some numbers that I think you want to be paying attention to. The best on record was 2017 with 171 days. So we've got a little bit of time to get there. And then, of course, the other ones, well, they're all coming up on where we started to see a sell-off. So then the question is, should it be a sell-off that we worry about? Well, 100 days or 108 days straight of being above the 50-day moving average, according to Subu Trade, is a pretty good sign for the next month still. But, you know, it does sometimes bring a little bit of congestion during the next 2 to 3 months, particularly if you look here at 2 months, that's actually going to push us into November or even December. There are some pretty big sell-offs. Most notably, of course, the scary one is the 2000 dot-com bubble, which a lot of people are saying right now is where we're at. Now, could we actually be in an AI bubble? I tend to think so, but as I've often said on the channel, and I continue to say this, when everybody's screaming bubble, and remember only a week ago we saw that August was most likely the most searched period, I think it'll be ever during this rally, of bubble concerns, that we usually have more to go. And one of the reasons is that we usually start to see an improvement in the broadening of the market. And this is actually one of the signs that you don't really want if you're a super long-term bull. That is that the Russell 2000 starts to play the game, starts to become the best investment of the next couple of months. Now, you can see here with this chart from macro charts, it is kind of pointing towards, well, you know what, that Russell is coming back on those significant highs of 2020 and 2020, kind of 4-5, and we are now making all-time highs. Well, has this happened before? It certainly has. It happened after 2020, which of course was an epic rally from the Russell, outperformance. And then, well, we know how that worked out. There was an epic rally also from 2017, kind of all the way into the 2020 crash. And we also got a really big one here as we made new all-time highs back in 2015-ish for the Russell. So the Russell plays kind of like the kind of catch-up style position. And it kind of points us here to some significant periods. I think most notably, if you're looking at a chart like this, and it's a really cool chart to look at, I'm kind of feeling this, guys. What are you feeling? Which one do you think it's part of? I feel like it's a bit where we're probably going to see some strength here in a broadening formation. If you want to put a code on your actual screens when you're doing some research, try ARKK versus S&P, so SPX or SPY. And what you'll see is ARKK, and we'll maybe bring this up later on today's show, ARKK is also breaking out, similar to what we saw during this period, and many others. So what's this kind of telling us? Well, it's saying that maybe we're getting that broadening pattern. And this can bring the markets up for a little while. In fact, if we do get this post-rate cut, it shows that the next 6, 9, even 12 months could be pretty good in markets. Yes, we might get pullbacks, but they'll generally be bought up. But the ramifications could actually be that horror word, the recession. So something we're certainly watching, and I think it's pretty unique. Most people are not really looking for this in the general broader community. So let's now talk about seasonal favors, the strong Q4. So this is from the compound. You guys can see here, it kind of brings up Wayne Whaley's data, which is that October may be a little bit more volatile. Generally speaking, October starts pretty strong, kind of starts to go sideways, then often sees that sell-off into November with a massive bump into the end of the year. Now, this is what most people are going to be forecasting at this stage based on the first couple of sessions of the October run. But another thing to consider is CTA. So this is Commodity Trade Advisors. And if you have a look here, the latest data from Bank of America actually shows that if the market keeps pushing up, look here at 67.75, it looks like according to the CTAs, that's going to bring in 6,900 in terms of what the momentum funds are looking at. If you see here on the NASDAQ, 25,000 plus, well, that's going to strengthen potentially to 25,600 according to the CTA trajectories here. And the Russell could go from like a 2,500-ish all the way to 2,600. You might be saying, well, that's not possible. That's insane. Well, this is what happens when everyone starts piling on top of each other. Now, of course, there are bear case scenarios, and the bear case scenarios are we lose some levels we'll look at later on today's video. But certainly, if momentum continues to favor this positive, what we call positive gamma, which is the options movement, then we could be in for a little bit more. Now, Blue Curtic here has a cool chart that I think really details this a little bit, which is that the S&P 500 has now been up 7 consecutive days in a row. And that's kind of rare. In fact, we've seen it go upwards of 9. I actually remember sharing this stat with you guys not that long ago. We've pretty much shared all of these stats for the last couple of years because, of course, we do track these days up in a row. And what you'll find is that when this happens, it generally does have a little bit more left in it. So you can see here it is, a little bit more. Here it is, obviously rallies for a while. Here it is, kind of starts topping, but again, not very scary type of stuff. And here's the most recent one where we continue to rally through. So you might say, oh, 7 days up means it has to come down. Yeah, you will see some type of sell generally around it, very small dip. But do remember, if you're tracking the markets, it's the daily 20 moving average that we want to be focused in on the most, because that has held pretty much every pullback so far since we've been seeing any selling from the street. There are a lot of people still caught offside that don't have the money in the markets from what happened back in Liberation Day in April. And this means that Wall Street's having to play catch up and people are levering. And I think that's something you need to remember. Leverage is coming in big time, but there are still some concerns. And I think this chart kind of details an interesting point, which is that we're not seeing private equities do anywhere near the numbers that the market itself is. You can see here, usually they go hand in hand. Private equity up, markets up. Fantastic. Then, of course, yes, there are drops, but still they're going together. Over here, markets up, private equity hits new highs. Over here, you can see private equity starts to drop a little bit. Soon after that, the market starts to go into sideways. And basically, it's a very important factor of how we look at an innovation economy such as the US. And so far, we are seeing private equity drop. So it actually topped just a little bit recently in terms of never actually made a high based on what we saw over here. But look at this rally. Look at how private equity was expanding. Look at what's happened post Liberation Day. It's not making all-time highs. And I think this is something that we need to consider in the back of our minds. Most private equity or most people are trying to go and list as IPOs. We know that IPOs often are late cycle style things because they show hype. When did we last see the most amount of IPOs, guys? here. What also did well? Russell 2K. Now, I'm not saying it's going to happen again that way, but it does make some type of sense. In terms of large transactions, we did get a massive one through semiconductors over the last 24 hours. VanEck Vector Semiconductor ETF, SMH, pretty much the most popular one. It saw a large transaction. You might say, well, what does that mean? Well, the last big ones, when we've had them so far, have often been kind of temporary tops for the markets. It's something to keep in the back of your mind. I don't think that necessarily you need to look at it as a sell, but you've got to consider that it probably is some form of take profit. Now, there's always two sides to each story. Of course, someone's taking the other side, but don't assume that the person taking the other side actually knows what they're doing. That is not something we can assume. So where else could we look for? Let's say semiconductors have done some of their biggest moves. Nvidia still looks pretty good on the charts, although the AMD news, obviously over the last 24 hours, means that now there's more competition. And that meme was absolutely knocking out the park, in my opinion. A new player has entered the building now, AMD doing the deal with OpenAI. But basically, there are other things also going on. So if you missed an AMD, I don't know if I'd chase it at this point, 25, 30% up, then a bit of a sell. You're going to need to see it structure up. But what about metals? Something that people are talking about, gold, obviously silver, but there are other metals as well. And you can see here that when we look at all of the metal economies around the world, they're all doing really well this year. And there are still metals and commodities that haven't really moved. In fact, if we take a look here at the commodity sector, it's picking up, but you might think, well, it's super overpriced. It's not even close to where it was just yet of the 2021, 22 kind of highs. So why is this important? Well, if you actually go back through history, it's not even close to being as expensive as it used to be. So it's still an interesting sector, and I still think there's opportunity here. The other thing as well is this a teller of inflation coming? Because the US break-even rate, that's just kind of sitting around doing nothing. But the commodities and metals and everything are moving up. So sometimes this can tell you that inflation's there. We just don't know about it yet. You can also see oil prices are just kind of sitting. We've been talking about it for a week and a half now. We've seen some improvements here on the street in terms of flow, but it's early days still yet. Will we see commodity producers, which are starting to skyrocket here, and oil price start to meet up? This is one of the widest spreads that we've had. Take a look here. If you go back to the 2000s, we've never seen the disconnect that we've seen in recent times. So clearly there's some interesting plans afoot here, and I think oil is definitely worthwhile watching into the end of the year in particular. Now, I want to say a big congratulations to anyone that's been in, of course, gold, silver, or any of these other asset classes. Guys, that was quicker than I expected. We posted this over on our X account, links in the description down below, literally, a month ago, just over a month ago, September the 3rd, and we said gold has broken out. Now, if you've been watching the channel, you know I was super bullish gold. I am super bullish gold, and even though it's hitting $4,000, I'm still super bullish gold. But the thing about this one is that we're now hitting into the danger zone. 4,000 to 4,200 is where we kind of estimate that this gold market should take a breather. And remember, it's been their best run without a significant pullback of over 10% in 100 years. This is a once-in-a-century run. That is incredible stuff. And silver is doing something very similar. But I wanted to say congrats to you guys. I know a few of you have the old gold, silver, and some other metals. And it just shows you, again, the abundance out there, guys. So many opportunities. And I hope that if you watch this channel, you kind of enrich yourself in the ideas of the markets, that you actually figure out that it's just not all tech. It doesn't have to always be tech. And I still think that in the future, especially in the AI future and all these other things that are going on geopolitically, that we could be in a serious commodities boom in the future, because some of these rare earth mineral metals and everything else, they're rare for a reason. They're not called rare earths because they're everywhere. And I just feel like we're going into a period of time that is going to be very reminiscent of what we've seen in the past and some of those movies that you sometimes watch where everyone's just looking for the rarest metals and the rarest earths. What do you guys think, though? Let us know. Silver spot, as we know, we're approaching and we are now pretty much at all-time highs almost. Why is this important? Well, you might think, well, it's overbought. Well, not really. I mean, again, volatility might come in. We may see a 10% plus sell-off, but I think that they're going to be bought. And the main reason is people are losing faith in currencies. We're in a currency war, if you want to call it that way. And of course, we're seeing all sorts of debasement occurring, potentially as well inflating away the debt is one of the ways that the governments can deal with these big ballooning deficits that they've got on their books. The other thing to note is, of course, the Buffett indicator. Just remember, I see this all the time. I just added in the videos to remind people that while it was genius at the right time, and boy, oh boy, did Buffett do well with it, it's kind of broken nowadays. You need to take the world GDP, and even then, it's not quite a great representation. Another one to debunk quickly is, I know government shutdown, and it sounds, really terrifying, but just remember the last 4 times the markets were up over this period. So don't always believe everything you see in the press. So from gold, approaching these kind of major targets, to what's going on in crypto. Now, we've talked about the trifecta. That is, of course, gold, silver, and Bitcoin. Now, Bitcoin has done everything that you could almost want from it so far. We've rallied up. We've pulled back at around the time that you'd expect so, which is this near the end kind of cycle. Will we see a new all-time high? So I'm estimating about 150-ish, 146 at the moment as a interesting target for the current Bitcoin price. I asked you guys, some of you guys are crazy. Come on, guys. Some of you guys said $1 million. Some of you said $3 million. I had to laugh. It's not that it's not possible. Anything's possible. I've learned to believe that. But at the same time, I'm not sure it's going to hit those levels in this particular run. But of course, a lot of you had those targets of 200K as well. So from Fibonacci perspective, 150 does make some sense. The other thing that makes sense is we're starting to see alts starting to get a little bit fired up. Now, remember, if this is going to go like other previous times, the alt season doesn't last long. I think, 30 to 45 days? Not long at all. So if alts go, they're quick, they're fast, they're furious, they're also dangerous. So you got to treat them like a penny stock. Be careful there. But alts are down to support levels across the board. And then, of course, we saw healthcare last week, just showing there are other sectors, there are other abundance kind of mindsets out there. And I want to put another reminder out there. If you haven't been watching the channel, make sure to do so the next 1 to 6 months in particular, because the structure of what's going, if the Russell does become the best performer, that is something you need to be paying attention to in markets, because it makes a huge difference moving forward to what we're actually looking at and what we're seeing. Structure will matter in this case. The S&P 500 has been rallying up. You guys can see here the daily 20 moving average, the red line, is holding above. The advanced decline line is improving. So that is not bearish when you look at a chart like this. So of course the markets do remain bullish. We're going small time frame. You can kind of see here, it's just a series of higher highs and higher lows. And if we go to the futures, here are the updated option levels each way. In terms of the market, it's dull, which is not something you generally want to short. And do I think it could fall? Yeah, anything's possible. But at the same time, it's all going to come back to the options. So let's take a look at the options for around the world. And first up, we'll go here to the S&P options. You can see here, we are currently in positive gamma above 6,700. If we get above, 6775-ish, supposedly CTAs start to get involved and we could push higher. 6670 is the put wall. So if the markets do sell, that's probably going to be a level that may find buying pressure. And that's kind of the big markers of the next 24 hours. 6,800 is probably going to be the target that a lot of bulls have at the current market, pushing up over time. Tesla, on the other hand, hit 450 again, and it continues to rally off that 430 area. We talked about that being a put wall, and just shows how good Tesla is at these things. 450 plus, $500 could be coming in. And it doesn't really matter what you think it's worth. Remember, markets can stay irrational long as you can remain solvent. Some of you guys think it's worth $1,000. Doesn't really matter. The main thing is, if it's moving in that direction and it's pushing options, then you're probably going to be seeing some squeezes across the board. NVIDIA side, we are at 185, so we've pulled back a bit on that old AMD OpenAI news, but still in general, a lot of people are going to be targeting 200, and it is still bullish on the charts, and we'll look at that soon. And for the old Bitcoin, 70 to 73 is now the major movement. So of course, we're sitting above 70, which is very strong for Bitcoin. We get above 73, it just kind of compounds on itself. I think Bitcoin looks pretty good on the charts. Ethereum and others look pretty strong. We've been talking about that. What about gold? 370, guys. This is becoming a major level. So you can see here GLD 364. I think 370 is a major area for this particular asset class. So of course you can marry that up with probably over 4,000 plus it'll be on gold. So We'll be watching that one very closely. Now let's jump into the charts and have a look at some lead indicators. First up from the bonds market, it's not concerned still. So you might be concerned, but the bonds market is not flashing super red, so not too worrying there. The option, or not the options, the oil market, now that has been slightly improving last 24 hours. You can see it rallied back up, but still underneath this low. So we weren't able to get above here. This is now going to be such a big level. I'm going to set alerts all over 66 in the future. We'll be talking about it a lot. But yeah, it needs to do a little bit more for me. At least give us another big bullish thrust. And again, oil services are holding very well considering all the stuff going on with oil. What about the US dollar? Well, the US dollar came and it pressed that most traded zone. So remember, this is the most traded zone. If we close above 98.50, you've got to expect dollar to go to 99.80. And remember, ignore the news, ignore the information. The main thing is if the flows break here, they're more likely to go here. If the flows break here, which is about 96.80, then it's more likely to make new lows. So at the moment, trapped between the zones, and you can see it's trading that most traded zone a bit. So that's been a pinpoint entry. For gold, the question is, has it done enough? You guys know I'm looking for that 4,000, 4,200. And I think consolidation or even a bit of volatility from that point. We're watching it very closely. Silver's doing something similar. Wow, this thing has just been incredible. It is starting to overbuy. There's no doubt about it. But we are now approaching, I mean, we're pretty much at those points where you've got those all-time periods. You've got the 1970s bros and 80s. You guys are back in the prof. Don't worry about that. It's just been a while, but you're back there. And of course, you can see here from 2011, we're starting to get up there. Now, I was asking people in the community, what was this one like? And supposedly people were like getting candelabras and that were silver and then trying to smelt them and sell them to get money for the silver. So maybe we need some craziness like that. When they get the candelabras out, guys, that's when we've hit the peak. And for now, I mean, we're still thinking it's possible. I mean, I upgraded to like $80. So yeah, it's possible. There's crazy numbers. I think silver's still cheap though on ratio to gold. Tesla, what's going on here? Very volatile, but still dull, still picking up. So it is what it is. And we've got the options levels before. Semiconductors, big trade on it. Very rallyific. This one here has just been going up, absolutely rallying. And as we say, if semiconductors are rallying, then generally speaking, you want to be bullish on markets. Nvidia pulled back on the AMD news. You can see here AMD went and hit the resistance. Do not chase these things, guys. If you're in it, fantastic. But I don't really chase this stuff. You know, I think at this point here, when we were opening yesterday, I said this looks like about around a target because I think people will take profit at this level. It's big news, and there's no doubt that there's a reason the stock's up 25% plus. But yeah, up here, you've got to now just consider it. And if you were lucky enough to be in the stock because you were looking at that double bottom base, well done to you. Chinese market's still bullish. You can see here a series of higher highs and higher lows. US 2K still bullish. And the main question here is IWM speeding the SPY? So the answer is quite simply yes, but it hasn't broken a downward trend yet. And that downward trend is going to be like over here. It's going to coincide pretty well with, I think it's actually a bit higher. It's like there. Yeah, that's right. So if we get this out, yeah, there we go. So we're going to probably be looking at a 0.38 plus ratio to get most of the big players in. But Russell definitely starting to play a lot better versus the SPY. And of course, we've also seen ARK-K do something similar. So you can see here, ARK-K, the Cathy Wood funds, which is, I just use this because it's like hypergrowth. So hypergrowth is on fire. And that basically, again, means risk on, leverage, everything else. Does it eventually end badly? Yeah, probably. But at the same time, it can go on for a while. So I think you've got to keep that in the back of your mind. When it comes to the NASDAQ, series of higher highs and high lows is slowing a little bit. The key one here is going to be MAGs. We're watching the Magnificent Seven in particular. This is going to be a bellwether for the condition of the market. Remember, if we do lose the big ones, the rest of the market can't really go up without them. So similar to what we did last time with the top 10, I'm watching this stock very closely, the Magnificent Seven. And Bitcoin continues to grind higher. So you can see here, guys, still up. And based on some of my analysis, I'm thinking maybe in the high 40s, 140s plus, and 150, that kind of area. In terms of Cardano, you can see here, base looks pretty good when you're looking at it on the weekly. And of course, Ethereum started to break up as well. And this is looking quite good in terms of consolidation on the weekly and monthly. And you can then see here the daily is pressing those highs. So people that are liking crypto, you're probably not upset with the current moves. Guys, if you enjoyed today's video, please remember to subscribe. Check us out next. Check me out on LinkedIn as well if you're interested. If you want to know more about the courses, how we designed some of these trades, such as gold, silver, China, some of the ones we've been longing, commodities. This is all part of a greater cycle. There are replications here. There are ways of doing these similar things. If you want to be more of a day trader into a couple of weeks, check out the day trading masterclass. You guys will be amazed at the pinpoint entry. And in general, as we always do as a summary, I think the thing is here is the data does point towards further structural gains. But do remember, if we continue to see small caps, broadening, you might think that's fantastic, but it's a real warning sign for the major future. So at the moment, yes, it's a sugar rush. Yes, it might seem crazy to some people, but it is what it is. The flows keep going and do come from the abundance mindset because boy, oh boy, there are a lot of setups coming in over stocks at the moment. Thanks so much, guys. You have a fantastic day. We'll see you in the next one. Bye for now.